Hi and welcome to a weekly outlook. This is Kim speaking on Monday the 25th of June. So let's start off looking at the key economic data due out this week first. So let's have a quick look on Forex factory calendar and see where we are. So this morning we've already had the German IFO business climate out. It came in fractionally lower than expected, but it's in line-ish. Side of that, we've got a couple of speakers coming up tomorrow. Let's have a look at those due to testify appointment. Okay, so it's Treasury Select Committee. So we've got the testifying. So we'll have the members of the MPC in front of them. I'm surprised Carney's not speaking there, but perhaps he's just waiting to speak to tomorrow. Here we go. So he'll be speaking tomorrow, but thought he spoke on the same day as them, but there are members speaking tomorrow between 10:30 and maybe longer. That can create certain volatility for the pound dollar. Side of that, 3 p.m. we've got the US data, consumer confidence out. Might come into play a little bit more. So the economy seems to be picking up, but I haven't seen a major move from it yet. And then we've got the FOMC speaker there Tuesday, due to speak at Birmingham Civil Rights Institute, Alabama. Okay, it's probably not going to create too much volatility there. Moving off through to Carney. Okay, I've already mentioned the financial stability report comes out there 9:30. That will be key. That report's released immediately at 9:30, and Carney's obviously speaking about it, so you'll probably get some pretty quick reactions at 9:30 tomorrow. So that's on the pound again. Looking forward to the afternoon then, core durable goods. This tends to get some volatility, not necessarily big moves, but volatility. And crude oil inventories, of course, at the moment is starting to be key again. We've got an FOMC speaker. Let's just check what he's doing. Due to speak about financial regulation. Okay, we'll leave that. We've got Bank of Canada speaker. We never take any notice of that. Due to release. Okay, that's a speech. Right, moving through Thursday, final GDP US. Now these numbers are because they've already been counted two before. This is the third count. They tend to have less impact, but any changes still will create some impact. But they're lesser down the list and less watched. Couple of speakers then afternoon. We got MPC speaker, Academy of Social Sciences. Okay, nope, don't expect too much from that. And then we've got another FOMC speaker, Housing Jobs Centre for Working Families in Atlanta. Don't expect too much volatility around there, although they can always drop a bit of a hint of their thoughts of the economy, etc. Leaving to Friday again for final GDP. We've already seen two versions of that out, so that's probably going to be a lower impact. German retail sales first thing in the morning, 7 o'clock. Expected to come in at -0.4. There is a seen as a certain slowing in some of these numbers. Germany is is the biggest GDP or has the biggest GDP, biggest economy, and that may create some volatility and set a bit of a tone for Friday morning. Aside of that, then we're looking at inflation. Now these estimates tend to have less impact, but can still create a bit of volatility. But we've seen the French and German data already released. The flash figures actually do give a bit more of a kicker, but still, I don't expect masses there unless they come significantly offline. Canadian GDP is released on a monthly basis, has low impact in real terms or medium impact. It may create a bit of volatility around the Canadian dollar, US dollar, but as I say, has less impact. But we've got this at the same time, the core price index there, the PCE, if I could only read it, produce. Remember what it stands for now. Yeah, no, I still can't remember. There, our personal consumption expenditure. That's it. Later out on the Friday. So there is some some stuff coming out during the week. None of it's really like the big significant stuff where the markets tend to hold their breath until it's out. So hopefully we'll get some volatility maybe around some of these numbers, but nothing there of major significance. Which leads me through to the technicals, and of course let's have a look at the sentiment on these markets a little bit. Now I do like, and I've been using this chart for some time now, these COT analysis that's on the CME site. It's pretty good, but I've also found another. I went digging and found that even I quite like this. Well, I like this almost as much. It's not as clear in the charts, but it does have price on as well, so I can show you a few more things of how price is reacting and why we should be more probably aware of some of these numbers. So what's happening on the euros? So I'm going to do currency by currency. Let's have a look at what's happening with euro. So asset manager we're looking at really in leverage funds, but although I will look at the overall big picture here because this can be quite significant. In fact, I'm going to start off looking at that because look at this outflow of money that's going through from that's sitting there is literally positions being closed overall. There's quite an outflow of money sitting there now. Of course, that will be expiring positions most likely, etc. But those positions are falling. But let's look at the asset manager then. These are the pension funds, big insurers, etc. What they're doing, they're very slow to move relative to the hedge funds, leverage funds below us. So what they're doing, they're taking their money from the long positions and putting half of it, by the looks of it, roughly, into short positions. Now the asset managers are still quite bullish on the euro there. I mean, if you look at the ratio of positions there, they're more than 2 to 1 on the more bullish side. In fact, you can see it on this long versus short ratios down the bottom here. In fact, let me just get rid of this pen if I can, be good. And you see there's around about 69% still on the long side. However, there is a trend, and we can look at the trend in a moment. And well, for the leveraged funds, the hedge funds, they're taking their money out of the long positions. They're really winding this down, and once again starting to pitch up on the short positions. Now this would have been a reaction, bearing in mind this was last Tuesday, so this would be the first measure after Draghi and co speaking. So this is probably a bit of a reaction to that, but when you look at the trend of what's going on here, now I've widened this out a little bit because it makes it a bit clearer, and I'm going to use a pen here so it doesn't go all funny every time I look at it. But this money here is the asset manager money, the slow money. Now this is pitching down. It had a little pitch up, but it's certainly come away from those highs there. And the green line here, this is the hedge funds. Now they've been coming off since the back here, so they came out a little bit early, but they're maybe a little bit ahead of the curve, a bit aggressive there, but gradually that's been switching over, and they're in, I mean, they're net negative position overall there. So the money's coming away from Europe, but there's possibly less money out there long or short. It's probably sitting on the sidelines a little bit as well. The overall positions may have reduced. And one thing to watch also, as I said, if you look at this position here, this is the sell side of the euro effectively. This is the dealer. And you see we had a peak right back here when that was peaking when the hedge funds were really piling into the euro there. So there was a peak, there was a trough in this particular case because it's right down. They take the other side of the market, so they're massively short to compensate for the longs, and that's, you look at what's happened there. Yeah, there may be a bit of divergence for those people that are sort of looking at what's going on there, but that's still edging towards that net position, which could be suggest a trend is going over altogether. But we'll see. So the big money's still and really following this tune is coming out of the euro long positions, going more short. So that's the sentiment from the bigger traders. Well, it's probably not, when you're looking at this monthly and come down to the weekly, not a great surprise when you see what the price has done here. Money coming out a little bit. Now last week we did see the double bottom there. Question is, are we going to, and one of the things I'm looking at is the potential for it just to sit into this into a range. Now it may just come back, click on the sort of the lows of last week's body there, lows of the body there, sitting there around about 1593, and take off a little bit. I mean, there's a potential for that to happen, but and as I said, I think it may just chop along somewhat. From what we see at the moment, there's the potential chopping range. We'll see how we go. We have got the weekly pivot below us at the moment, so it may still draw price down. I'm still looking for that to be ticked out of the way. Now, when price hits that, it's then, well, what's the next reaction? Is it going to continue through it? If it does, it sets a more of a bearish sort of theme for the rest of the week, and maybe look for these lows. Now, it's only when these lows are actually taken out, these significant lows here, that we really then, well, it's more confirmation that this is a lower high and the market's rolling. So that's what I'm looking at the potential of. We'll see, but as I said, the most likely scenario I think at the moment is maybe chop with all the markets as they go. Cable has come back, and it's look, I've done a lot of describing here. The good thing about this market is quite easy to go on to the next report, and we can look at the British pound. There we are, got report on that. So this is Tradingster site, great site, free at the moment. They may eventually charge for it when everyone starts looking at it, but let's have a look at where the money's going here. So again, money coming out from the dealer's point of view overall. Let's have a look at so net positions are reduced. What's happening here? Well, the asset managers have been bearish pound. I mean, they're almost 2 to 1 bearish on the pound, and they've been adding to their bearish positions again. And ironically, the hedge funds have been erring more on the bullish side of things, but they too, they've taken a big chunk out of their long positions, and looking like they're starting to build their shorts again there. So it's at that point of where we get the equilibrium, and all of a sudden you get a switch. Now, when these markets, these two numbers here used to be amalgamated, when you used to get this sort of switch from positive to negative, it would signify a stronger trend in that direction to the downside. So it's a little bit more. I mean, you can still look at the old data and see those trends, but I do like this breakup of numbers. So where are we sitting at the moment then? I'm just looking at the shorter term here. I may just pull it out a little bit so you can see a little bit more, but you see I'm looking for peaks and troughs in these markets as well, from the overall markets, all the different people taking part, participants even. So where we're sitting at the moment, I do need to shrink this down a little bit. Let's just bring it down. Here we go. So what's really happening is the dealers, the sell side, to get there. I mean, it is more going into that sort of more long side of things to carry the other side of the market, and well, the leverage money, which is shown here on the green, is selling off, continues to sell off. And as I said, sorry, that's the leverage money, and then the asset managers money is dropping too. So it's just dropping back again. They were ahead of the curve really. They was on the short side for some while. This zero line across the center here is quite key, and as I said, we're getting close to it's sort of like a second tick. We've already got the big money underneath there. We'll probably get the slightly lesser money coming through and joining that, and it's probably no surprise they're negative when we're seeing so much Brexit speak going out, the great unknown as it is. Now, what we've got here on this week, in fact, let's just go back to the monthly here for a moment. The monthly, well, it's closing in a pivotal area, which was just around about that 1.3 area. It does look like it could continue on the downside there. If we come to the weeklies, then if we can, that'd be good. And there's a little bit of divergence going on this RSI, aggressive RSI. I'm sitting on here. Did close a little bit within maybe on the bands there. There's possible further upside, but we may see a bounce in the short term. We come back to dailies. We've got the weekly pivot. We're pretty much on it now. Personally, I think with the money flowing out, on the sentiment flowing out, and this market moving like this, the short side really is the safer side to be probably trading it at the moment. And of course, with the Brexit worries, now of course we will get bounces when there's anything positive, but that's always a risk. But the main side on this market seems like it's an easier downside than an upside. So sentiment for me is bearish. Okay, dollar yen. We'll speed through these a little bit quicker as we run through these now. Let's run back, look at the yen positions. Now remember, this is the other way around effectively, because this is yen dollar it's based on. So what's happening? Who's getting bullish yen? Looks like not a lot. It's a neutral situation on the asset managers, really. I mean, it's a goodish neutral with not massive positions overall. And well, perhaps the hedge funds are looking there much more on the bearish side, which would see the dollar yen pushing up, of course, if this was to continue in this way. So it's looking at the sentiment really is for the sort of short positions on the yen. Now, as I've said before, on the yen, it is a difficult old one because we get what we've got going on here, where the money sort of is getting stronger. Bear in mind, with those bigger positions and those big traders, they can hold their money, they can start hedging their money, and they can take these drawdowns. We as day traders and swing traders don't want to be in such big drawdowns as such. Now, what we're seeing here, I mean, I'm just looking at this daily picture. I'll move away from it in a minute, but it's just there's so much consolidation between the monthly R1 and the pivot there, and we'd expect maybe another shove to the upside there. The bias is just changing with a lower high being kicked in, so it's technically, well, it'll be interesting to see how it reacts over the next day or so. Any buying coming in, it may push it back towards that R1. Let's just go out the time frames a little bit, and I mean, it really just confirms them. And whoops, didn't really want that one. It's the wrong. There we go. It's changed to there, so we can see what's going on there. You see what's going on. Well, the monthly is still, you would argue, on the down scale, and got downside potential there. On the monthly, so that there is certainly conflict here, and technically here on the weekly as well, it's just edging. I mean, the last week sort of hammer there, almost-ish. It still looks like it may have some more downside there, so it may be a case of being a bit patient and looking for potential on the shorter time frames, potential any moves to the upside. As I said, it's where it's sitting here, it may not be the best of places, but if it starts pitching up to that at some point over the next day or so, we may get some movement. But at the moment, I've just had someone text me, it could get back to that weekly 100 with the weekly 100, he says. Weekly, let's go back to that weekly 100. Weekly 100 to me is right in the middle there. It's in a mess. The daily 100 is below though, and that maybe if it does roll over, come with these prior lows. So maybe if it rolls over, it could be a target in that way. But just watch what the big money's doing. But they can be wrong as well. Just bear in mind. And as I said, they can hedge their position. So Aussie dollar. Now switch across. So the Australian dollar. So what we're looking at here, it's interesting. There's not massive positions, but here, well, there's certainly nothing much on the short side. Look at this. The sell side is literally completely long. In fact, the deal, because everyone else wants to be bearish. Pretty much. Hedge funds are a little bit more balanced on this, between their long short positions, but the big money is still pretty bearish, and actually building, both are building their short positions here, although there's a bit of a mixed case for the leverage fund, so which is probably not a great surprise when you see that we could be bottoming out a little bit. And the more important thing is, well, I say more important thing, but this chart over here, really, this dealer money, effectively, when you look, and overall the bias being so much to like 98% of the positions effectively are towards, well, effectively there's a long, and so nets the other way, almost short. And you just think, well, hang on a minute, are we getting to a point here where we're sitting here where we're seeing a bit more of an extreme of that money? And it doesn't mean say we're going to see something happen immediately, but is it going to start rolling over? Well, if you look back historically, the dealer's money's been, and the amount of positions open, which is an important factor here, it's been much more bullish in that respect, or much higher. But there are points, and if you look at the lows back here in Jan 2015, around that sort of area where we're seeing these sort of levels, points here, and it's not too far off where the price is at the moment. And then of course we saw the rallies, so there is potential. All that short negativity, because at some point there's no one else to sell it to, is there? But maybe for now. Technically, of course, from a weekly point of view, it still looks soft. It's broken, although recovered quite well last week into that wedge that was sort of, I say wedge, but that trend line. It managed to get back up to its trend line, but selling off at the moment and looking relatively soft. So it just may be that trend which they've been bearish on for some time just continues. For now, it's the easiest route, but do watch out potentially for switchbacks on the Aussie, I would suggest, but wait until I would prefer to see some of their money switching hands first, just to get some more confirmation. Remember, you're really looking at weekly time frames and nothing less. Okay. Although it does help us be on the right side on the bias in the short term, even day trading, hence why I use it. So Canadian dollar, let's go and have a look at those positions there. Canadian dollar. So just whilst this loads, oh, it's loaded. I'm looking for it to load, and it's loaded. I am in the basis, or in the process even, of recording a session looking just purely at cotton analysis, so that will come out on YouTube in the next day or so. Okay, let's have a look where we are. So remember, again, this is inverted to what we'd normally see. So long positions on here would see the Canadian dollar, or long positions down here would generally expect that the Canadian dollar against the US dollar is moving down. So it's US dollar, Canadian dollar, just so you understand that. So here, if we're seeing long short positions going in, we'd expect the Canadian dollar to be moving up against the US dollar. And what have we got then? It's a neutral sort of zone again on the asset managers there, not too dissimilar, and well, just erring slightly more at 1.5 to 1 on the hedge funds there. So overall, it's probably a 2 to 1 on the short side overall. Big picture there. That's how the way it's sitting. And that's erring towards weakness of the Canadian dollar. So on that basis, let's have a look at what's going on. Well, the weakness is certainly been showing there, and continuing to run at the moment. It's edging that way from a weekly point of view. Let's just come out to a monthly picture in a moment and just see if there's anything different. No, we certainly broke that trend, but this current month that we're in at the moment, it's looks like by Friday we'll certainly be closing out of that downward trend that we saw overall on a monthly basis. Weekly, well, we're still seeing these high lows, high highs coming through, and it still looks bullish from that perspective. From a daily point of view, it may look like with that shooting star we've got some downside. It's already pitched into its weekly pivot. What's going for the Canadian dollar? Not a great deal at the moment, and we may see that when we see the GDP on Friday. We'll see what comes out from that, Thursday or Friday, can't remember which day it is now, but later in the week we may see what's coming up from there. Oil prices, yeah, they're seeing a little push up at the moment, but the overall agreement was to pump more oil, which is may have a downward effect on the longer term of oil. So Canadian dollar, well, bullish for the US dollar stroke Canadian dollar. So there we go. This month we may be sort of almost pitching out pretty close to that R3, but the month ends on Friday, and it gives us a retracement would be quite good, I think, for the long side on the bigger picture on a swing basis. Right, okay, that's pretty much all of those. I just want to have a look at oil, and there we go. See where oil's doing. Got a kicker last week on the upside there. It was the agreement was to raise outputs, but not as much as some would have liked. So hence the maybe more bullish move there in the end. Where we're sitting on the shorter time frame, well, what goes up in such a steep angle may come down. If we start seeing it break through this daily 50, where they've got the weekly pivot below, and maybe it'll roll again. This may just be a bigger correction in that move. In fact, I rarely do it, but I might even put a little Fibonacci chart on here, and see, there you go, 61.8 it's ran into. So it's got the potential for a bit of a roll maybe over there, and if that does, well, that takes the pressure off the US dollar against the Canadian dollar and puts the US Canadian dollar potentially more bullish. Right, that is oil. S&Ps. Where to with these? Now we can look at. I'm going to just look at the. I'm going to look at the futures market only because it's a little bit easier. But I'm going to compare like with like on this futures market. We can use a sentiment on the futures market. Again, the COT reports are sitting there for everything that's soybeans, all your softs there, your livestock, more softs. Your energies, it's all sitting there in terms of you can be looking at what everything's doing. I'm just going to look here then at the S&Ps. The one that's looked at and is traded the most is this E-mini S&P 500 stock index. That's where all the volume is, not the S&P 500 as it is. It's the E-mini version, which is where all the volume is, just to see what the boys are doing. So what we've got going on here, well, overall you see that the huge just go to the left here and you see the dealers are massively still there short, because they've got to be the other side, massively short. It's a bit of a picture of what's going on there, but let's really look at the asset managers who are sort of less than 2 to 1 short. They're more, sorry, 1 to 2 short even. They're 2 to 1 long. Get the right way around in this scenario here. And look at this, a big money going back into that last week. Again, I think we had the week before, it was coming out of bonds, running into long positions here, and it seems to be doing so again. Now, probably when you look at the markets, you think, why the hell they're pumping money in, so it's dropping down. But well, they naturally, hedge funds, naturally, pension funds want to be long stocks. Okay, so there's that position there. Now the leverage funds, we can watch these. You've got to be really careful. They're much more, well, they're bearish, but they can be bearish, and they've been bearish for long periods wrongly. So you've got to be a little bit. They've still got quite sizable positions, but the biggest size by far, those asset managers, and who still want to be buying, and they're probably buying the physical as well as having futures sitting there. Sometimes they may be just doing the futures here as a hedge to our overall positions, but they're, as I say, they're bias long and assets anyway, or stocks even. So neutral zone here for what went out last week of the leverage funds. They're unwinding some of their shorts. They're also unwinding some of their longs, so maybe just some profit taken in terms of what's actually sitting there. But the bigger the bigger money is still pushing money into this, and the money is coming off by looks of it on the weekly point of view, which is coming down towards this lower band, towards the weekly 21s. There may be support coming through from what we're seeing there. We still have got an untouched monthly pivot. Could be a draw still. It does, when you look at this picture here, it does look weak, and which may suggest a move back. I mean, the daily 50 is not that far away. It's missed the weekly pivot at the moment, but it does look a bit soft here. Now, the sentiment's not really sort of helping too much, but as I said, it's always errs on the more bullish side in the long term for the bigger guys. The short-term guys, so the asset managers, the hedge fund managers, they tend to be a bit more fickle and can be wrong for quite some time as well. But they seem to be wanting this short side. Anyway, it does look technically short at the moment on this, what we're seeing here, but big picture is still got higher lows coming through, higher highs running through there, so any movements to the downside may soon turn, and it could become once again a bullish move. Okay, that's pretty much it for me. Nothing else to be said. Have a great week. I'll be back next Monday. Bye for now.